Major funding for this program is made possible by grants from Bank of America, Merrill Lynch, and Perfect Building Maintenance, Kilroy Architectural Windows, Inc., New York's Window Company, New York Community Bank, Capital One Bank, Greenberg Traurig, LLP. Additional funding is provided by grants from Akron Gold Brothers, LLC, Briarwood Organization, Beechwood Organization, C.B. Richard Ellis, Cushman and Wakefield, Dime Savings Bank of Williamsburg, Hal Fettner, Durst Fettner Residential, First American Title Insurance Company of New York, Friedman, LLP, Gemini Real Estate Advisors, LLC, Jack Jaffa and Associates Real Estate Consultants, James D. Kuhn Real Estate Institute at Syracuse University, Madison Realty Capital, Massey Knackle Realty Services, Meridian Capital Group, M&T Bank, Muss Development, LLC, the Moynihan Group, Newmark Knight Frank, Orphanides and Associates, SJP Properties, Sterling and Sterling, Stonehenge Partners, Urban American, W Financial Mortgage Fund, the Witkoff Group.
Hello, my name is Michael Stoller. You know, the fourth largest city in the country is Lower Manhattan. And Lower Manhattan really is a great place to live, to work, and to do business. So what's happening in Lower Manhattan? Today I've assembled 4 people who actually live, work, and do business in Lower Manhattan. My guest today includes Liz Berger, the president of the Alliance for Downtown New York, Ross Moskowitz, a partner at Strzok and Levin, Greg Carney, a partner and the chief investment officer at Young Wu and Associates, and last but not least, Frank Siami, who is the founder, chairman, CEO of FJ Siami, and also my executive producer for today's show. So, Frank, you know, you've been in Lower Manhattan. I mean, don't worry, I didn't forget about how long you've been in Lower Manhattan. You've been in Lower Manhattan how many years?
Probably about 25 years.
And you have your office at 14 Wall.
Yes.
And you did a development down there, so what's happening today in Lower Manhattan? You know, there are people that you started today saying, I was a pessimist. I like Lower Manhattan. What's really happening in Lower Manhattan? What do you see happening in Lower Manhattan?
Well, I think that there's tremendous development going on in Lower Manhattan. I think it's something like $30 billion being put in place now, real time, in 1 square mile at Lower Manhattan. I don't think you can find any square mile in the country that has that kind of development going on. You've got the PATH station, you've got the
It's a little late, right? The PATH station?
It's okay, a little late, but it'll get there. Better late than never. The PATH station, it'll be a great building. I mean, when it's finished, the Fulton Street Transit Station, another extraordinary design. You've got the Fulton Street Corridor, $150 million being invested in the East River waterfront. Just there's all kinds, and not to mention the private development that's going on and Ground Zero. So, I mean, I really feel that once this all comes together, and it will.
Hill, the new
Fetterman Hall, the CUNY, once this all comes together, Goldman Sachs' new office building, I think that Lower Manhattan is not only going to be the heart and soul of this city, but it's going to be the place that everyone wants to be.
Now, Liz, you're really, you're the spokesperson for Lower Manhattan. I mean, because of the Alliance, which has done such great work over there. But you've been living in Lower Manhattan for 28 years. So you were there, as one would say, before the resurrection of Lower Manhattan, because in the early 90s, Lower Manhattan was in trouble. I mean, Lower Manhattan was truly not what it is today. So what do you see happening with the Alliance and what's going on in Lower Manhattan?
Well, I've been there.
And how come you ended up in Lower Manhattan 28 years ago?
Because I wanted what every New Yorker wanted. I wanted to walk to work in a safe neighborhood. I wanted a doorman, and I wanted a rent I could afford. And that's the story of Lower Manhattan. It's scalable, it's dense, it's got unparalleled access in public transportation to the regional labor market, it's safe, and it feels like a little village with the tallest buildings. And I think that's what's exciting. It's been exciting really that way for 400 years. We're the first live-work community in the New World. And I think that theme of innovation and that theme of intense mix of uses continues. And I think that's why we have an enduring future. That's why we have some of the lowest commercial vacancy rates, even in this economy, in the country. And that's why Frank's optimistic. That's why Greg is now in Lower Manhattan.
Which I will relate, and we'll talk about the vacancy and the rates and something. You know, Ross, you've been working for the government, and you've been with Strzok for the last 11 years. Now, the interesting thing is Strzok is probably one of the largest tenants in Lower Manhattan.
Correct.
And, you know, people say, you know, why is a firm like Strzok in Lower Manhattan when most of the other large law firms aren't there? How come Strzok remains in Lower Manhattan?
Well, first of all, there are many large law firms still downtown. Fried Frank, Sullivan and Cromwell, Strzok, so we're certainly not alone. Second is the pricing is great. When we looked in 1995 and 1996 of what to do when we were in 7 Hanover Square, our tradition has been a downtown firm. And the pricing at 180 Maiden Lane was you know, it's one of our best assets. And now as we look to renew our lease at 180 Maiden, we've looked around at many different places, including Midtown.
You looked, or have you renewed your lease?
Well, we've renewed our lease. When is this airing?
In January.
Okay, so yes.
Cleary just renewed their lease last year. Sun and Shine just signed a new lease downtown.
I mean, you know, there's a couple different things. Like any employer, we look to not only maintain at a cost that is you know, competitive, but also how we're going to recruit and retain people. And one of the benefits of being downtown is really what Liz and Frank are talking about, is a tremendous amount of amenities being set up in downtown. One of the benefits that we look at is the fact that these projects, as Frank said, are all funded. You know, yes, they're taking time, as any construction project will, but they're funded. In terms of, you know, other projects that are being talked about, the funding isn't necessarily there, whether it's in Attleboro, or whether it's in Midtown, or where have you. This is across the country. The fact that these projects are all funded, I mean, right outside of literally our door, is the redevelopment of the East River Waterfront. Open space, parks, bicycle trails. I mean, it is something that when we recruit young attorneys coming up, they want to know that, and they also do like the idea of being able to live in a doorman building with amenities that are literally 5-10 minutes away.
So now we have the people, the new player in Lower Manhattan. I mean, there haven't been too many purchases in New York City in 2009, but you and your partners were very active, and you spent, I believe the public information was about $150 million for the former AIG headquarters, which are landmark, iconic buildings. And what are you planning to do with these two buildings? I mean, next to each other.
Lots of plans. We're newcomers to Lower Manhattan, but not to New York. Been around 30-some years.
We know that, but we talk Lower Manhattan.
Yes, and this particular investor group is absolutely a newcomer to New York in general. So they saw a lot of the same things we did. You know, we're still in the process of assembling all of our plans and putting the team together for that project. The way the deal was put together, we essentially built in time to go through that exercise. We can sound out the market, we can talk to tenants, we can get a little smarter about what's in the building, what we can make use of in terms of what's there.
But why did you buy that building? I mean, I'm not saying, you know, perhaps you know, there may be a condo, it may be a rental, it could be an office. Why did you and your investors from Korea make a decision to go to Lower Manhattan? I mean, you could have bid for the Worldwide Tower. You could have bought some other property.
We saw two things fundamentally. One, we don't buy markets, we buy buildings. We saw that particular situation with AIG as a seller and with the quality of the real estate in this case as something we could not pass up. And as pricing became a little more clear, we realized that we could acquire at such an attractive price and at a time when, in our view, the capital markets were about at the lowest possible point in the cycle as they could get to. I mean, you remember it was first quarter or so of this year, and everybody was still reacting to the ripple effects of Lehman's bankruptcy. There was a lot of uncertainty in the air. Everybody was paralyzed. And we felt entirely comfortable about going in and owning a bricks and mortar of that quality in the neighborhood of $100 a square foot. It was an unthinkable price in our view, and we're still very comfortable with that.
But in essence, you know, what is transpiring in the month of January of 2010, you know, 4 New York Plaza, a 41-year-old B plus building. I mean, it's a
B plus, A minus.
B plus, A minus building is now trading for $97 a foot. It doesn't have the iconic, of the AIG buildings, but it's a different situation. And that building, if they didn't have a JP Morgan lease for 75% of the building, they wouldn't even be able to sell it for $97. There was not really that much interest.
Right, and we looked at that transaction. I think it's a different profile of deal from the very beginning, right? They're essentially locking in a return for a portion of that building over a period of time, and I don't know the particulars of JP Morgan's leaseback, but it's for a substantial portion of the building.
I mean, it's 75% of the building at $28 a foot.
And very attractive rent.
And if you effectively take in, even with the incentives and other situations, because you do get the low Manhattan real estate taxes and other situations, you're still getting a very small return on the property. Now, Frank, your major building business is building, and the cost of construction has gone down by how much would you say?
I would say 20% plus or minus, depending on the market.
So what are you doing in Lower Manhattan today besides working?
We are actively looking for properties. We were involved. We didn't end up buying the AIG building, but we had a group that was looking at that building. But I feel like Greg does in terms of the bricks and mortar. That's an extraordinary building. It was incredibly maintained by AIG. The central plant is terrific. The windows have all been maintained and replaced. The replacement cost of that building would be $800 a foot. Even building a new building in this market with a 20% reduction is still going to cost you $300, $400, $500 a foot, depending on the building.
In essence, with the exception of the Trade Center site, there is no new construction of any office buildings in New York City. I mean, there are 2 buildings that are being finished.
Right.
Really 11 Times Square.
Right.
But otherwise, there's nothing that has gone in the ground. There's no bank who would shudder to do anything over there. Now, I've always said on a number of my shows that people consider Lower Manhattan the low-cost alternative. And that's not a bad comment, because you can gain a Class A office space at a reduced price. I mean, the vacancy factor is pretty good in Lower Manhattan, but you can get space for $30 a foot or $35 a foot.
Well, this is an issue in a strong economy as well as in a weak economy. And I think what we found post 9/11 is that being the value proposition isn't enough. There really needs to be value added.
But you've also done incentives. I mean,
sure,
partially all of you have been involved with this incentive program.
But here's kind of the unique algorithm of Lower Manhattan. And you mentioned that it's the 4th largest central business district. The residential population, which has exploded since 9/11, and the tourist population are really supporting the commercial. They're not displacing it, but they're creating this intense group of amenities that are what a certain kind of tenant, it's not really just about one sector anymore, a certain kind of commercial tenant wants. And the residential community continues to grow. Residential vacancy continues to be very low. The tourist population is back above 5 million, is projected to go above 10 million in less than 2 years.
I mean, in reality, for people who don't know, the highest grossing store per square foot in U.S. is in Lower Manhattan. It's
Right.
Century
Century
21.
21.
That's
I
right.
mean, even selling items as low as a pair of socks for for $1 to selling Brioni suits for
More
12.
than that.
No. They have every type of thing, and you can't go in there. I mean, it's amazing.
It's a destination.
It's truly a destination, and in reality, Lower Manhattan has been able to pick up. Everybody wants to go down there. 5 million visitors. There are more people who go to Lower Manhattan on the weekend than during the week, is what some people have said. Tourists.
Well, I think it changes, and as you point out, I live in Lower Manhattan, so I'm kind of a barometer. I think what has happened that is unique is that the tourists and the residents are really supporting the commercial market, and that's what creates the value added. That's what puts the pressure not only for incredible subway service, but surface rail, for ferries, for buses. That's what's driving the explosion of restaurants, the parks. And these are the kinds of things that commercial tenants looking to relocate are asking for. It's because what they find in other places.
Which is the rest of the story beyond the rents, right? Because that rent differential, you're right, particularly nowadays, is such a huge driver for big companies making decisions. And if you look at I think the current stats would put Midtown as a general sort of blended rent level about 33,
For
35%.
for B,
it's about
for
70
B buildings. You know,
But if you
with
blend it all together for purposes of the conversation, it's $70-ish versus I think downtown is about $46, and that's for the higher quality buildings,
for the
skewing that
A
number
buildings,
higher.
right, correct.
Yeah.
And we're talking about,
But
in
if
our
you really,
case,
if you take into consideration the fact that Lower Manhattan has the REIT benefits, which effectively could be as much as $12 per square foot, and you have real estate taxes, you're even saving more money.
the differential is even greater. But I think Liz still makes the important point, which is longer term, you can't rely on that as your main differentiator and your reason for attracting tenants.
The other thing I think about Lower Manhattan is the retention. I mean, Liz has been there forever. Ross has been there quite some time. I correct you, I don't live in Lower Manhattan.
No, I know.
My 2 children do. My wife has visited them. She wants to live in Lower Manhattan. Where could you walk east to west with water in 10 to 15 minutes? I mean, once you're there, and we just moved to 14 Wall. I was in a Greek Revival building in the Seaport, the largest collection of Greek Revival buildings right down in the Seaport. Moved to 80 South Street with great views of the Brooklyn Bridge. Moved to 14 Wall Street. Never looked back, never looked for the Brooklyn Bridge. Looking out the window at Federal Hall, the original Morgan Bank, the 14 Wall Street, and the Stock Exchange, and a plaza. It's like the only European piazza in the country. It's just amazing. And I really, every day, I don't want to live downtown because I like a change in scenery. I don't want to walk to work, but I may change. But I think once you're there, Goldman's people, Strzok, myself, I think that there's a retention and a growth unlike any other part of the city.
And it's a combination between the very old, I think it's the only place in New York that still looks like old New York, and the very new, because one of the consequences, and in some ways the happy consequence of 9/11, is new infrastructure, new transportation, new wiring, new water mains, and it has been a challenge.
I mean, people don't realize about the great restaurants and the Stone Street and the situation.
Or the retail.
We have a new restaurant on Stone Street.
Or the retail.
It's fantastic.
Think about all the retail that has been set up there, higher end. I mean, imagine 10 years ago that Tiffany's or Mays would be sitting front and
CUNY,
center.
Pink, Maison du Chocolat.
The Capitol
Tourbillon.
Grill looks like it's standing room every day for lunch,
That's right.
which just opened up a few weeks ago.
So it's happening.
So, but what is different today than in the 90s when there were unbelievable incentives for Lower Manhattan, like the 421Gs, where they had the 15-year tax abatement, full tax, not abatement, it was a full tax.
Right.
Well, the first thing that's different is the vacancy rate is less than half of what it was in the mid-90s. And what's very interesting is the way the vacancy rate now is not tracking to citywide unemployment or employment the way it was. That's number one. Number two, we still have the original Lower Manhattan plan minus the 421G, but the CRP and the tax benefits with some additional ones, the Silver
Electricity.
Marshall Plan
Right.
of 2005.
Right.
That's just been renewed in Albany.
And under the
track
Trade
to the
Center,
Trade
you have the
Center.
other program, the $5
Sales
a
tax.
square foot, and the
Right, the
sales
sales
tax, and
tax.
the other
Right.
situation.
I think also
And what's
there's-
different also, there's more there. I mean, in the early
I mean,
90s.
look at the population.
No,
I
but
mean,
there's,
the
a there's a
population.
mindset. There's been a shift. In the early 90s, having worked down there, there was not the concept of seeing strollers and dogs. There was not a concept of living there. If you lived down there, it was more you were in frontier land.
Yeah,
The
but
shift-
I think also, you know, when we talk of Lower Manhattan, what also is part of Lower Manhattan is Battery Park City. And in the 90s, I mean, the only residential building was the Left Right building.
Gateway Plaza.
The Gateway
Right.
Plaza,
Right.
which, even though it's one of your clients, it was a disgusting building. It really didn't have any character. It was built, it was a Mitchell Lama type of building. You know,
But it had a
built-
pool.
It had a pool, but, you know, and then you had...
But it
you know,
also
one
had a
of
vision. It was the first one.
Right.
No, it was the first, but now you have all the other buildings. Now, I don't want to be a little negative, but we are going to have a relocation of Goldman from their buildings to the new tower, which
Right.
they've built a beautiful tower. We are
Which
going,
has started.
okay, which has happened. There is going to be a relocation because my friends and supporters at Merrill Lynch Bank of America may move people up to the tower or other situation. Deloitte may relocate. AIG is out of the area. You know, plus you're going to have the new tower. How easy is
By the
it
way,
going-
AIG is
Not out of
is
the area.
reduced, but they're not out of the area.
No,
And
no,
in
they're
fact-
reduced. They're
In
reduced.
fact, they're making new commitments because of what's not only coming out of the Tower building and their smaller sister building, but because of what's going on in their businesses. They
Right.
have businesses that are growing.
So my question is, it's a citywide problem. I mean, it's like somebody saying, Midtown Manhattan, you just have 11 Times Square. You don't have to worry about it. That's why, Boston Properties decided not to build on 56th Street, and that's why Boston Related didn't build on 47th Street. So it's a different case. But we have this new building being built in Lower Manhattan. So what effect
You
is
talking
it?
about the Freedom Tower?
Freedom Tower, right? The Freedom Tower and certain companies
and
relocating.
2, 3, and 4, ultimately.
I mean, so my question is, it's a question of absorption of the city. I mean, when the Trade Center was built, it was all government offices initially. Then it changed. I mean, just prior to 9/11,
Right.
Most successful indoor mall in the country.
Most successful indoor mall. There's no question.
Here's actually, we have a fairly big research department, and that's a lot of what we do to support brokers and owners. And the interesting thing is that while financial services are our signature industry, they're only 29% of our jobs. And if you look at the 235 firms that have relocated to Lower Manhattan since 2005, only 14% are financial services.
I think, there's this misconception that Lower Manhattan has financial service firms. And in reality, Lower Manhattan has a lot of different types
You
of
bet.
firms. And it's
Creative,
not, I mean,
nonprofit,
Wall Street,
professional.
let's be realistic. Who's on Wall Street? It's residential today. Wall Street is
Well-
not, I mean...
Not entirely, but it's a
that's
different
not
story
true.
than it was.
Deutsche Bank is
It's a
on.
different story
Here's
than
what's
it
great
was
about Wall
historically.
Street. It's actually the paradigm for Lower Manhattan. It's residential, it's high-end retail, it's commercial, it's professional services, and it's also creative services. 14 Wall is SOM.
And then you're going to go around the block. You're going to go to Broad Street. You're going to have the Hyatt Andiaz is opening up over there in one of the buildings.
On Water and Wall.
Right. No, they're at 40 Wall.
They're at 75 Wall.
75 Wall.
75 Wall.
So they're over there, and the Satai is opening up right now, and there's other buildings over there. So I think there's
With a great restaurant, actually. It's
Right.
already open in the Satai.
Yeah.
Now, where do you see?
And Michael, remember, we lost 10 million square feet.
13.
13 million square. Thank you. 13 million square feet was lost downtown. I mean, I do think that there will be absorption. And these buildings aren't going to be
There has
built
to be.
tomorrow.
I mean, it's a fairly predictable historical fact that the cycle will work its way back up, right? There's a question of when and how strong it'll be, but that absorption will come. You have to have a view on the economy in general, and then you have to have a view in part on financial services, but not just on financial services. There's a lot of different demand already in Lower Manhattan that we're seeing, some solicited and some where we're not out formally marketing, that we're seeing less conventional, certainly not financial services firms, less conventional demand from the academic world, institutional world.
Put the change of on Broad Street when he made the
55
plug
Broad.
and play,
Right.
which you were involved with.
Right.
So there were different situations. I mean, Lower Manhattan.
But
has
we've just done our kind of 10-year anniversary version of that program with the Hive at 55, also in Bill Rudin's building, which is a co-working facility.
No, I think there are things happening. I mean, Lower Manhattan, you have PACE, you have the NYU school over there, you have the education, you have the government, you have all of the situation over there. And I think, you do have a hospital, which now has a great affiliation with New York Cornell. You have the situation, and then,
You have schools being built.
Schools, Ratner is building over there, the
for the
infrastructure.
community, both commercial and residential, that is being
What's
well
happening, and I think my viewers would be interested, what's happening with the Seaport?
Well, the Seaport's got a great museum, South Street Seaport Museum, with a great exhibit. And
I'm talking about the
wait,
Seaport,
it's on.
the
I think
retail.
that's an anchor. I think an anchor to the Seaport are the historic ships, which we are getting support from the city to restore. The waiver tree is going to be restored. The buildings are there. We actually put a 25. No one knows this, but we spent $25 million building the museum right when 9/11 hit, and now we're finally using the galleries. Rouse had great plans. It was embraced by the community. Even the landmarks groups were behind moving the tin building, doing certain strategic things that made sense. and then we see Rouse going into bankruptcy.
No, but when they merged with
now-
General Growth.
But
Right.
now
Sorry,
you
yes,
see
but
some,
yeah.
there's
General
some
Growth going into
stability,
it.
and that's it, right? At least General Growth's restructuring has
Yes.
been accepted. There will be a resolution there, and whether
Yes,
they
General
continue
Growth
to...
is
And I think
is
what they're
coming.
going to do is start to rethink, at least for the short to midterm, how they tenant Pier 17. I think that they're going to make it much more responsive to the community that has grown up around it. Plus, East River Waterfront Park, that's a $150 million
Pier 15 is
park
being
that's
rebuilt as
going
we
all the
speak.
way
We
up
hear the
to
pounding
Cherry
every
Street.
day.
Yeah.
And let's not forget, right across the street, David Rockwell, well-known architect, is redoing this huge, huge park that's going to be right adjacent to
Rolling
South Street.
Slip.
I mean, there's still a lot going on there, and maybe General Growth's plans, as they come out of the bankruptcy, are not going to be as
we were
grand.
talking, we're going to have a W Hotel in a couple of months in Lower Manhattan.
Right.
You're going to have the Hyatt on Diaz, which is the highest brand in Lower Manhattan. You also have a number of limited service hotels that have opened up in Lower Manhattan. Unfortunately, some of the other luxury hotels have been put on hold. The one at 99 Church Street and 40
which is
West
exactly what happened in Midtown, which you talked about. All these
And it's
projects
what
being
should
put on
happen,
hold.
right? The market's
Exactly.
telling you something. That's the right answer right now. The financing isn't there. The demand isn't
But,
there to support
the
those
other thing,
projects.
Before we met, we were talking about some other areas where the governor calls, and let's say at Jersey, the governor calls. We have Liz. I mean, no, seriously, the Alliance.
This
has
is
been
the
there-
spokesman. I'm not,
Wait a minute, the Alliance has been there for a very long time, 40 years. David Rockefeller started it with Chase, One Chase Plaza. It's been through a lot. We are experienced downtown at dealing with adversity. When the Young Woo's group was thinking about buying AIG, Liz was more than willing to meet with them, tell them about all the different things that go on in Lower Manhattan. I think it's important because you really
I think
do have
the
a
real
network.
key is Lower Manhattan is user-friendly. I mean, unfortunately, the Depository Trust moved, but we don't even have time to do it because to appropriately talk about Lower Manhattan, I can't do it in 30 minutes. So I promise that later on in the season, we will invite many of you back, or all of you back, especially Liz, okay, to talk about what's happening in Lower Manhattan. I'd like to thank Liz Berger, Ross Moskowitz, Greg Carney, and Frank Siami. See you next week.
Major funding for this program is made possible by grants from Bank of America, Merrill Lynch, and Perfect Building Maintenance, Kilroy Architectural Windows, Inc., New York's Window Company, New York Community Bank, Capital One Bank, Greenberg Traurig, LLP. Additional funding is provided by grants from Akron Gold Brothers, LLC, Briarwood Organization, Beechwood Organization, C.B. Richard Ellis, Cushman and Wakefield, Dime Savings Bank of Williamsburg, Hal Fettner, Durst Fettner Residential, First American Title Insurance Company of New York, Friedman, LLP, Gemini Real Estate Advisors, LLC, Jack Jaffa and Associates Real Estate Consultants, James D. Kuhn Real Estate Institute at Syracuse University, Madison Realty Capital, Massey Knackle Realty Services, Meridian Capital Group, M&T Bank, Muss Development, LLC, Des Moines Group, Newmark Knight Frank, Orphanides and Associates, SJP Properties, Sterling and Sterling, Stonehenge Partners, Urban American, W Financial Mortgage Fund, the Wickoff Group.